Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, Bitcoin is running into important resistance while new signals are beginning to form here in the short term. And on top of that, over $60 million worth of Ethereum long positions just closed. All of that and more later in this video, so definitely stick around. First of all, in case you didn't already hear, the US CPI inflation rate fell to 6.5% year over year with the new CPI inflation numbers that were recently released. And once again, if you want to get real-time updates as soon as these things happen, make sure to follow me over on my Twitter. Link to my Twitter in the description down below and also in the pinned comment. But anyway, if you watched my last video on this channel, 6.5% year over year was the expected number. And so we didn't really see an immediate reaction as soon as this number got released, but not long after, obviously, Bitcoin and Ethereum and most of the market continued higher because now that this number has been released, some short-term uncertainty has been reduced. And anytime you reduce uncertainty, you're technically reducing some risk, at least just in the short term. And due to this, the futures market probabilities have slightly changed over the last one day. For example, right now, almost everyone in the futures market is pricing in for just a 25 basis point hike happening at the next Fed meeting, which is on the 1st of February. And then after that, the majority in the market is still expecting another 25 basis point hike in the March Fed meeting. But simply based on what the majority has already priced into the futures market right now, the March Fed meeting might be the last rate hike for this entire rate hike cycle before essentially the Fed stops hiking rates for quite a few months and then potentially starts cutting rates later this year. And in case you're wondering why this is so important, why Fed pivots and Fed U-turns are really important for markets, is because if you look at the last couple of major Fed pivots in the past, we saw a major Fed pivot at the bottom of the 2018 bear market during December 2018, and we also saw another major Fed pivot during the bottom of the March 2020 crash. And so basically, when the Fed pivots from tightening monetary policy, going from quantitative tightening to quantitative easing and beginning to cut interest rates, that type of pivot normally coincides with market bottoms. And this is due to the fact that the Federal Reserve has an unlimited US dollar money printer, which essentially makes it by far the most powerful market manipulator for any market that is valued in US dollars. But anyway, now getting into the Bitcoin part of this video, this right here is the weekly Bitcoin chart. Once again, just reminding you that we have a massive bullish divergence here on the weekly time frame that is still playing out. And typically, these massive divergences visible on the weekly time frame play out over at least multiple weeks, but usually multiple months. And so far, it's been around 1.5 months since this bullish divergence confirmed. And so we're likely due to see this bullish divergence continue to play out over the next month or so before potentially it begins fading away again, depending on the data at that time. But overall, for the larger bear market at play, for at least the next few weeks, I continue to expect this bear market to be put on pause. But of course, this is all talking about the moves visible on the weekly time frame, which don't exactly show the small short-term pullbacks that might be visible on the daily time frame or the 4-hour time frame, for example. And so even though this much larger bullish divergence has been playing out over the last 1 to 2 months, that doesn't mean that we can't experience a little bit of short-term bearish price action while this bullish divergence is playing out on the larger time frames. And now, if you zoom into the daily Bitcoin chart, the price of Bitcoin has recently just broken above 18.6 to 18.7K, which is where this 38.2% Fibonacci level of resistance was sitting at. And so technically speaking, 18.6 to 18.7K should now be acting as some shorter term support for the price of Bitcoin. And obviously, it's very important for the bulls out there that the price remains above 18.6K approximately, because otherwise, if we see a break below 18.6K again, then that essentially invalidates this breakout and obviously would act as a bearish signal on the daily time frame. And combined with the fact that the daily Bitcoin RSI is entering well into into overbought territories right now. This is already telling us that we're due to see a bit of a cool off here on the daily time frame. Now, keep in mind, a cool off can either be some sideways price action or a bit of a pullback in the price of Bitcoin, because both bearish price action and sideways price action help reset the RSI from overbought territories back down towards more neutral levels. And then perhaps after we see a bit of a cool off for the price of Bitcoin, we could continue higher later on once the RSI has actually had a chance to reset. So as of right now on the daily Bitcoin chart, I wouldn't actually expect the type of price action that we've been seeing over the last few days to continue over the next few days based on this daily Bitcoin RSI already well overbought. But technically speaking, even though we are due to see a cool off from this bullish trend, the trend itself, when you're looking at the price action and the RSI on the daily time frame, is still a bullish trend because we're still forming higher lows and higher highs as of right now. It's just we're due to see a bit of a cool off from this bullish trend on the daily time frame to help reset this RSI, once again potentially giving us some more room to the upside later on. And as for other levels of resistance, we do have the 50% retracement level sitting at around 19.7k, but more importantly, the golden pocket sitting at approximately $21,000 per Bitcoin. And on top of these horizontal levels of resistance, we also have this descending line of resistance right here based on these previous highs. And right now, this line is sitting at approximately 18.9k. And so we really need to see a daily candle close above around 18.9k in order to finally break out from this bearish trend on the daily time frame when you're looking at these previous lower highs right here. And so once again, in the immediate short term, I'll be watching 18.9k as resistance. If we see a breakout from there, then I'll be watching 19.7k, but more importantly, 21k as resistance. But like I said earlier, any potential moves up towards those sort of prices would likely happen after we actually see a bit of a pause from this bullish trend, a bit of a short-term cool-off. And this is also due to the fact that we're actually seeing another short-term bearish divergence here on the 2-hour Bitcoin chart. Obviously, the price forming higher highs while the RSI is forming lower highs on the 2-hour time frame, meaning that just in the immediate short term, we have lost a bit of that bullish momentum right now. And once again, we're due to see a bit of a short-term cool-off. And so let's just say with the price due to see a short-term cool-off, the price running into a bit of resistance and the daily RSI well into overbought territories, personally, I would not be wanting to enter any over-leveraged long positions because obviously late long positions can indeed get wrecked even if we're still in a bullish trend, just like how late short positions, for example, can get wrecked even if we're in a bearish trend. But obviously, that's not personal financial advice. I'm just letting you know that right now, I wouldn't exactly enter into an over-leveraged long position after the price has already pumped and we're due to see a bit of a cool-off. But anyway, now getting into the Ethereum part of this video, this right here is the daily ETH to US dollar chart, and obviously, this breakout on the daily time frame is still very much active. It is still playing out with this technical price target just below 1.7k, which I've got as a price range right here in between around 1650 to 1.7k, which is currently where I'm targeting based on this ascending triangle pattern breaking out and also based on this previous high, which has acted as resistance in the past. But like I said yesterday, between now and then, there are some other levels of resistance. For example, the golden pocket sitting at around 1410 to 1430, which is the immediate resistance to pay attention to. But if we see a confirmed breakout on the daily time frame above 1430, then I would expect the next resistance at around 1520, and above that, then I would expect the price to continue up towards this price range just here. But like I said, for Bitcoin on the daily time frame, the daily Ethereum RSI is also in overbought territories right now, which is actually telling us we're due to see a bit of a cool off from this bullish trend. And so honestly, I would not be surprised if we actually see a bit of a rejection from this golden pocket, at least in the shorter term, as in potentially over the coming days. But once again, even though we are due to see a bit of a cool off in the shorter term, technically speaking, this bullish trend here on the daily time frame is still valid. We're still forming higher lows and higher highs in both the price action and the RSI on the daily time frame. And now, if you zoom into the much shorter term, looking at the 2 2-hour ETH to US dollar chart. Right now, like Bitcoin on the 2-hour time frame, we're also seeing a bearish divergence, which is technically already active right now on the 2-hour ETH chart, because we've already confirmed higher highs in the price and lower highs in the 2-hour Ethereum RSI. And if you're looking at the last time this happened on this time frame, we technically still remained in the bullish trend. We didn't actually see a full-on bearish reversal, but what we did see was a bit of a pause from the bullish trend, where we saw a lot of choppy sideways price action, which helped to reset the RSI, giving us some more room to the upside later on. So once again, a bit of a cool off in the short term before potentially continuing higher later on, considering the trend is still technically intact. But what is interesting is if you're taking a look at the ETH long positions on the Bitfinex exchange, this right here, by the way, is on the 4-hour time frame. And just recently, all in one go, we instantly saw around 46,000 ETH worth of ETH long positions exit those positions. And so basically over $60 million worth of ETH long positions on the Bitfinex exchange just closed pretty much all at once. And considering the fact that this has happened while the price was actually going to the upside, this potentially means that some big players are seeing a bit of a pullback coming soon, at least in the short term for the price of ETH, because obviously long positions bet on the price going to the upside. So if we're seeing a massive amount of long positions close, that essentially means they're taking some profits off the table, reducing some of their risk, or potentially seeing a bit of downside price action coming soon, even if it's just in the shorter term. But believe it or not, you can make money in crypto no matter what direction the price is heading, whether the price is going to the upside, to the downside, or simply chopping around sideways. You can make money either way if you watch these videos popping up right here on your screen. The video in the top left is a complete step-by-step tutorial video showing you how to trade crypto, and the video in the bottom left shows you how to make money in crypto if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.